Welcome to the Tuesday topic. I'm Laura McHugh and this is Terry Cuccinata, and we're with Weichert Realtors Coastal Properties. Every other Tuesday, we bring you information on the housing market, and today we want to talk to you about how the economy impacts mortgage rates.
Exactly. So if you've been thinking about buying or selling a home, you're probably paying very close attention to the mortgage rates and wondering, well, what's ahead? You may have heard about the federal funds rate, which is set by the Federal Reserve. The federal funds rate influences how much it costs for banks to borrow money from each other. Though the Federal Reserve doesn't directly control the mortgage rates, they do control the federal funds rate. And when they lower the federal funds rate, it puts downward pressure on mortgage rates.
So when the Fed meets, there are three important measures they look at as they make their decisions to lower the federal funds rate. Number one, the rate of inflation, which you've heard a lot about recently, and you've likely experienced it with prices going up quickly on regular everyday items. The Fed has said its goal is to get the rate of inflation back down to 2%, and right now it's still higher than that, but moving in the right direction, as you can see in the graph. Number two, how many jobs the economy is adding. The Fed watches how many new jobs are created each month. They wait to see job growth slow down at a consistent rate before lowering the federal funds rate. If fewer jobs are created, it means the economy is still strong but cooling a bit, which is their goal. That appears to be exactly what's happening according to Inman, who says, the Bureau of Labor and Statistics reported that employers added fewer jobs in April and May than previously thought, and that hiring by private companies was sluggish in June.
Then number three, the unemployment rate, which is the percentage of people who want to work but can't find jobs. So a low rate means a lot of Americans are employed, but it can also lead to higher inflation because more people working means more spending, which usually drives up prices. Right now, the unemployment rate is low, but it's been rising slowly over the past few months, as you can see in the graph. Now, unfortunately, a consistently rising unemployment rate is something the feds need to see before deciding to cut the federal funds rate. And that's because a higher unemployment rate means reduced spending, which would help get inflation back under control. So what does this mean moving forward? While mortgage rates will continue to be volatile in the days and months ahead, there are signs that the economy is headed in the right direction that the feds want to see. So Jerome Powell, chair of the Federal Reserve, recently said, we want to be more confident that inflation is moving sustainably down toward 2% before we start the process of reducing or loosening policy.
So basically, we're seeing the first signs now, but the Fed needs more data and more time to feel confident that this is a consistent trend. So let's assume that direction continues. According to the CME FedWatch tool, experts say there's a projected 96.1% chance the Fed will lower the federal funds rate at their September meeting. And if they do that, mortgage rates should respond. Of course, the timing of when the Fed takes action could change because of new economic reports, world events, and other factors. That's why it's usually not a good idea to try to time the market.
Exactly. So in summary, recent economic data may be a signal that hope is on the horizon for mortgage rates. However, it is important to rely on a local real estate agent that you can trust to keep you up to date on all the latest trends and what they may mean for you. So if you've been thinking about buying or selling a home in South Carolina Low Country, specifically the areas in and around Bluffton, Hilton Head, and Beaufort, we would love to be your trusted real estate agents to keep you abreast of any changes and trends in the housing market and to share information about the area and all the surrounding neighborhoods.
For more information, please subscribe to our YouTube channel for all of our Tuesday Topic and Flip Flop Friday videos. Thank you so much for joining us today, and we'll see you Friday for another edition of Flip Flop Friday.
Bye-bye.